A very good morning to you. It's great to have your company this Wednesday, the first day of September, the first day of spring. My name is Jessica Amir, a senior market analyst with Bell Direct. Well, a warning bell. Commodities falter ahead of the Fed meeting this month. Aussie GDP data is ahead at 11:30, but investors might totally look past it and await the ugly third quarter. But now let's go to overseas markets. We saw US stocks sour on their last trading day of August. The major indices closing in the red. The Dow down 0.1%, the Nasdaq flat on the nose. The S&P 500 also down 0.1%, but closed high for the 7th month. So why did US stocks trip overnight? Well, two reasons. We saw house prices across 20 major capital cities rise 19% year on year. That's the biggest jump in house prices since 1987. Secondly, consumer inflation expectations ticked higher again. So these two factors popped up that'll likely push the US central bank to scale back stimulus. So for investors ahead of this meeting, we'll likely see people adjusting their portfolios, looking for stocks that thrive in high interest rates and also taking profits where they can. So what to watch locally today? Well, firstly, the Aussie share market will probably kick off a traditionally negative September month cautiously. The futures were suggesting a fall of 0.4% ahead of GDP data being released. Second quarter GDP is tipped to show Australia's growth rate slowed from 1.1% in the first quarter to 0.5%. Of course, the markets could totally ignore this. Why? Well, we know third quarter GDP is going to be quite ugly and show that Australia's growth rate slowed dramatically in the third quarter. However, if you want to watch the GDP data out today at 11:30, you'll probably see a tug of war between growth and defensive sectors depending on the outcome. So if GDP is weaker than expected, you'll probably see investors favour and buy defensive trait stocks. So they could favour stocks in staples and utilities. On the flip side, you might also see investors taking profits in growth sectors like financials, energy and industrials. However, if we see the reverse, if GDP is stronger than expected, you'll see the reverse of these sector moves. The second focus today, commodities. They'll likely be bracing for change from here on in ahead of the Federal Reserve meeting this month. But overnight, though, what did we see? Well, the iron ore price fell slightly. The copper price also fell. The copper price lost 0.3%. But we saw the New York listed BHP fall over 2% and New York listed Rio Tinto fall over 1%. So it'll probably be not a very good day today for BHP and Rio listed on the AEST, as well as other iron ore and copper stocks. So expect them to falter. Meanwhile, the oil price headed south, falling below $69 US, falling from its 1 month high amid Hurricane Ida, which forced US refineries shut. But why did the oil price fall overnight? Well, guess what? Washington is now pushing OPEC to pump out more oil. Now, the third focus today, which could add selling pressure to the market, is that a lot of companies are going ex-dividend. That includes Iris, IRE, Wesfarmers, WES, Mount Gibson Iron, MGX. What else to watch? Well, the most traded stocks at Bell Direct. Shopping Centres, Australasia SCP, was one of the most traded stocks yesterday. Their shares rose 1.5%. The reason buying spiked was because more Australians are getting vaccinated. And secondly, SCP's chart flagged a technical bullish signal, meaning Shopping Centres Australasia shares could continue to rally over the short term, as indicated by the MACD and its moving averages that recently formed a golden cross, I might add, meaning a lot of upside could be coming for Shopping Centres Australasia. As for trading ideas that could be worth a look, here's one. Meet the carbon fibre wheel business for the car industry. Carbon Revolution, CBR is their ticker. They were reiterated as a speculative buy by Bell Potter, an increased price target of $1.80, up from $1.79, and that implies 58% share price growth in a year. Now, this is a car wheel maker that's worked with performance and premium names like Ford, Ferrari and Renault. So why did Bell Potter upgrade CBR? Well, CBR's quarterly activity reports were broadly in line with estimates, and Bell Potter expects higher sales in the second half of 2022. And if you're into looking at charts to back up your decision making, CBR's technical indicators are suggesting its downtrend since April could be over, and the stock could move higher very soon, as it looks like it's about to cross the signal line of the MACD, meaning it could rally higher, while CBA's moving averages look like they could also trigger a golden cross, meaning a decent rally could come for CBR. But remember, it's a speculative buy for Bell Potter. As for trading ideas that could be worth a look in other areas, well, bullish charting signals have been seen in Firefinch, FFX, Aussie Broadband, ABB, and Ava Risk Group, AVA. That's according to Trading Central. I'm Jessica Ramir with Bell Direct. Stay safe. Happy trading.